Well, hello. Welcome to Passive Wealth for High-Tech Minds podcast. There are lots and lots of IT professionals who work in the industry. These IT jobs are so exhausting mentally, there isn't much time left for such folks to make clever decisions about their investments. Most are unable to put their money in the right asset classes. This is Prashant Kumar from My Realty Gains. I have worked in corporate America in IT and in business organizations for 25 years. My goal is to educate IT professionals like you about the benefits of passive investing. I will be passing my knowledge and will bring guests who have done very well in their careers and can explain the process and advantages of passive investing. So, let's begin. Well, hello. This is Prashant Kumar from My Realty Gains. You are listening to yet another episode of Passive Wealth for High-Tech Minds. Today, I have with me a great friend of mine, an honest person whom I have known for almost a year now, Trevor Thompson. He was at one point my business partner, and he would be my business partner. I wanted to pick his brain today. Trevor, thank you so much for joining today.
My pleasure. Glad to be here. It's an honor.
Awesome. Trevor is very, very active in multifamily space. He has invested in 1,000+ doors, and in retail strip mall. He lives in Austin, Texas. He has done work in townhomes to condo conversions, basically invested in there, and he has invested in single family rental portfolio also. He was becoming a partner in my project in San Antonio. He has done, work in a ground up multifamily fund, a medical office building. He's very, very active. He's very, very active on social media. Great person whom you should know about. He lives, as I said, in Austin, where Tesla factory is coming in. He's a good resource overall. He has been around the block for a long time and looking for good opportunities, where he can invest and he can share. He's always willing to share his knowledge with a lot of listeners, a lot of podcasts. So today I invited him. Trevor, once again, welcome to the show.
Yeah, it's my pleasure to be here. So, as I said before, it's an honor, and we're going to do a deal together again very soon. I know it.
We know it 100%. As I was talking to you earlier, the deal that we were working together did not work out, but you are always on my mind, and I'm pretty sure we will do deal pretty soon together. Yeah. Having said that, basically the purpose of the show, as I mentioned earlier, is there are a lot of folks who come from all the countries, Eastern Europe, India, very high tech, very family oriented people. They work hard very much, a lot. They work very, very hard. But the problem is because they work so much hard that their energies are consumed and they are not able to focus on anything else. For them, the meaning of what investing is only investing in stocks and bonds. So please tell me a little bit what else could be the meaning of investing for these people.
Yeah, so there's a big difference, obviously, from investing in real estate versus investing in stocks and bonds. If you actually look at the successful people in the world, 90% of them created their wealth through real estate. So yes, they're involved in the stock market and different things, but a lot of people don't know this. Like if you research Warren Buffett, very, very active in the real estate space. So he does his work, his day job is in investing in stocks and companies, but his passive income, he says, if you don't make money while you're sleeping, you're going to continue to work until you die. His passive income is all built up in real estate holdings quite extensively.
So basically you are saying is a stock and bond is just one way of investing. There could be 1,000 other ways through which you can invest in different asset classes, different kind of portfolios. I mean, like you are investing in single family rental portfolio, condos, multifamily, storages. In real estate, there are many asset classes. where you could invest. And
Yeah.
how do you find those opportunities, Trevor?
So all of my opportunities are found with networking with people. It's very important. If you're considering to get involved in the real estate market, you want to connect with people, get to know the people, just like we did doing a deal, and then make sure that the people are looking for their investors' best interest. So, for example, we both know we had a deal that didn't happen. No investors lost their money. That is what a passive investor is in real estate. And a lot of people don't understand that. And of course, we've just seen some massive fluctuations in the tech market and the Bitcoin and all the other markets. Real estate is a little bit more steady. I mean, maybe one time in American history where there was a big fluctuation, and they fixed a lot of those things that are wrong. And it's a necessity, right? People need places to sleep, places to live, places to go to do business. There's a couple of asset classes like office, a little bit of a struggle right now because everybody went to work to home, but eventually they'll all go back to work. It's slowly but surely coming in, and those things will turn around. And clearly hospitality, it suffered for a little while, but now airplanes are full, hotels are full. Real estate investments rebounded, very, very quickly and stayed, in fact, got stronger even through the pandemic, which is, a bit very remarkable.
So I know, Trevor, you invest into real estate quite a bit, and you have invested a lot passively. How do you go about what would you suggest to these high tech people? I mean, I'm just talking about high tech. It is applicable for
Yeah.
everybody. How should one start investing into real estate? For obvious reasons, 90% of the deals are 506B, which we
Yeah.
can discuss a little bit later on. But I would like to hear your thoughts. How would you go about looking
Yeah.
for those
So,
deals?
so the most interesting thing is that you have to do a little bit of education on your own. You need to understand, what are you going to do? What are the risks? What are the rewards? But the most important thing to find out is the who you're giving your money to, right? You don't want to give your money to these people that are all over the internet. You want to give this money to people that you've established some sort of a relationship. So for people watching this show, all of the different, I've seen your first few episodes. I watched them before I came on. They were excellent, by the way. These are the kind of people that you want to watch, get to connected with, set up some time to talk to them and to get a more comfortable of what you want to do. It's all about comfort and to make sure that what they're offering matches what your needs are. And you talked about it, right? That they come and they're so focused. Okay, I'm not a tech guy, but I was super focused on my job. I knew I should be doing real estate, but instead I just kept, whatever we want to call it, working for the man or do whatever. And I just kept working and working and working and working and working. And I mean, I worked super hard, 80 hours a week, 7 days a week, 20 something years with one company. And then COVID came along and they said goodbye. And I went, wow, I have no passive income, right? Because your stock portfolio doesn't send you checks in the come every quarter or things. And so that's when I really made a decision. Well, before that, I started it, really made a decision to have money making while I'm asleep, right? And everybody's goal should be to have their passive and income investments replace their active income. And a lot of people love their jobs. You do not have to leave your job to become a real estate investor. What you want to do, though, is you want to have your money making money while you're asleep. And then it will eventually, when you make your life decision, you've got enough passive income coming in that you don't have to wait for your pension or some sort of other retirement plan. And then you can make a lot more different life choices.
One important thing, Trevor, you kind of elaborated, touched a little bit, was none of the investors lose
Yeah.
lost their money. I would like to ask you a question: How can investor make? I mean, what is the safeguard for the investor in the sense that his money is not going into scrupulous hands? What are the checks and balances put into the syndication business that investors feel comfortable that they are not giving their money to syndicator, rather it is going to the property. Share your
Yeah.
thoughts,
So it's
please.
definitely, this is very much what a lot of people don't think. It's very much a relationship business. You don't think of that, right? We don't have a relationship with Tesla. We don't have a relationship with Apple or IBM. They're just a product, a commodity, and they give out products. But when you're investing a little bit where your money goes to somebody, and to an individual, you want to make sure that you have some sort of relationship with them. And in fact, many of the ways the rules are written, you must have a relationship with them to be able to invest with them. And they need to make sure that you understand what you're doing and the investment is correct, for where they are in their life, right? You want to make sure that this is the right investment for them, because all types of investments do different things, right? If you're investing in something that's a deep value add, the cash flow comes later and you make your money on the sale. If you're investing in a new build, there's no cash flow till it's built and sold, and you've got to understand the differences and make sure that it matches what you're going to do. So for example, when I was working, it was wealth preservation and growth. That's all I cared about, right? I wanted to double my money every 5 years. That was my goal. I didn't need the cash flow to live on, so I just kept reinvesting it. Well, now that I'm doing this full time, I've switched my investments because I need the cash flow. I need a little bit of money. Haven't reached 65 yet, getting closer, but I need the money to come in to be able to take care of daily expenses. And so you need to know what fits you where you are in your life right now. And the beauty of real estate is there's something that fits everybody at every series, every position of their life. There is something that it can be a perfect product for them.
I meant to ask, that's a very good answer, by the way, but I really meant to ask you, what are the regulations, like
Yeah.
PPMs and, you know, stronger property management, what are the things which are giving mental peace to these investors from the security standpoint? I mean, how a syndicator is bound by law not to scrupulously use investors' money for their personal gains.
That's correct. Yeah. So there's different types of deals that are offered. The most common is a syndication called a 506B. And the difference between a C and a B is I have to have a one-on-one relationship with you. And we have to have some what they call substantive communications. So I need to know, where are you in your life? What kind of net worth do you have? What kind of liquidity of cash do you have? What are your goals to make sure that what I'm offering you fits into it? There are 506C, which are only for accredited investors, which is a whole other topic. And those ones can be advertised, but regardless of which one you do, you want to make sure you know the person that you're giving your money to, right? There's some flashy people out there, but you want to make sure that you know the person and you've spent some time watching them. You've listened to all of Prashant's interviews with his clients, and then you find them on LinkedIn or Facebook and you see what are they doing, and then you start attending and getting educated, and you want to give your money to somebody who will take the time to educate you. And that's, again, I know that's why you've started these podcasts, right? It's not because you have nothing to do on a Friday afternoon. It's because you want to educate people so that they can create passive wealth. One of the things that always amazes me, and I'm also an immigrant, Canada's not quite as bad as, or different as coming from another country, very similar, but people come to America for the American dream. And the American dream is not working 80 hours a week for a paycheck. The American dream is the land of opportunity, where you can take the money that you earned while you worked and you can invest it, and it makes money without your work and continues to grow in the amount of money because it multiplies over time, to where you can make the choice, am I going to work or not work? That is the American dream. But a lot of people don't think of it that way. They get stuck in, and I got stuck in, just going to work and not even thinking about it. And, I didn't start till I was in my 50s. And boy, I wish I'd have started in my 20s. Life would be a lot different.
Yeah. You hit the nail right on the head, Trevor, when you said that American dream is basically while you are working, you save and then you invest that money so that you don't have to work and your money is working for you. And at one point, you make a decision whether you really need to work because your money is already working for you.
Yeah.
So it is so much important that you start investing your money in the right asset classes with the right people, and maybe in stock and bonds also. Diversify your portfolio. That way you have some income coming, some dividend coming from those stocks and bonds. And we are not talking about bonds and stocks here, so we will remain biased towards real estate. And I know you as a person personally, because I know you very well. You are much more than a passive investor. You know in and out of the deal. That's when you would go and invest in a deal.
Yeah.
But tell me, how much time if somebody who has residual income, who are able to probably save, let's say 20, 50 to $100,000 a year, because both husband and a wife are working and they are able to save that much money. How much time really is needed by these sort of families to invest and let that money grow? How much more attention do they need
Well, so
for
other
such
than getting
investments?
other than getting educated, which everybody needs to get somewhat educated. And again, watching the podcast, everybody who's going to come has a slightly different view, has a slightly different expertise. So you want to make sure you're watching these to get educated. But once you get educated and make a decision, you have nothing to do. There's nothing to do. Well, there is. You attend a quarterly phone call and you open up your bank account when the money gets transferred in and you look at it and you go, oh, it's there. This is good news. And you go back about what you're doing. Um, as a passive investor, it is clearly that. A really good example of it is an aircraft. You and I, you were the pilot, I was the co-pilot on our deal, and we brought a bunch of passengers in the plane. Now, they all had to buy a ticket, get on the plane, know where they were going, but we were doing all the work. And they sat on the plane. And when the plane landed, just like getting the rewards, they got to their destination. And our destination, of course, is financial freedom. And so that's, if you really think of it simplistically, we're the co-pilot and pilot, taking people to their financial freedom. And yes, you're going to have to invest for a little while to get financially free. It's not a get rich quick scheme, which is, I think, good news, because good news is steady, reliable. Real estate is steady and reliable, right? It always goes up in value. There's things like forced appreciation by running it better, fixing it up. But this is as steady as you go. This is not a get rich quick scheme, but it does create the peace of mind because it is passive, and it is truly the way that you get to create wealth for your family.
So it's really a no nonsense income stream that you are creating when you invest in it passively with a real estate syndicator, so to say. To kind of elaborate what you just mentioned about how much time is needed. I mean, in my mind, if you are educated, maybe a month or two, you spend an hour a day or something like that to get yourself educated. And after that, once you have decided a place where you want to invest, and you continue to invest further. I mean, once you have invested in a deal, then I think an investor really do not have anything, maybe half an hour a month,
Yeah.
to talk to where you have invested,
Yeah.
if you want, if you want. I mean,
Yeah.
I have invested money with many people, and I have not talked to them for 2 years because my checks are coming.
Yeah.
So really speaking, no need to talk. So only if you are eager enough, then you probably need maybe 10-15 minutes a month, or a half an hour a month. Other than that, once you have invested, and you are enjoying all the benefits of passive real estate investing. I mean, there are many podcasts we have talked about what are the fundamental benefits. So we probably wouldn't go too much into them. But that's the point is, and the other thing that you said, you started pretty late, like me. Also, I'm about 47 today in 2022, 48 maybe, 49, whatever, doesn't matter anymore. So the point is that you start early in your life,
Mhm.
right? I mean, do not wait to invest till the last day,
Yeah.
because you never
Yeah.
know.
The saying is, don't wait to invest in real estate, invest in real estate and wait.
That is correct. That is correct. That's a very good point. Yeah, don't
Yeah.
don't wait to invest in real estate. Invest
Yeah.
when you have money, and then just wait
Yeah.
and just
Warren Buffett says we have shade from a tree because somebody planted a seed many years ago. And it's the same idea, right? Take some time to build your wealth, but you have to do it, or again, most people, they don't think it through, right? And they're just not creating this passive flow of income, which is just so vital for making you financially secure.
so tell us a little bit more about financials of these deals that you have invested, not exact terms, but tell us how much can potentially, how much on the lower side, how much on the higher side can these investors uh, make while investing passively. If they have done their due diligence, spent some time on the deal, they have found a
Yeah.
good operator, what is the typical kind of returns that these investors should expect?
Yeah, and there's a couple of ways to look at your return, right? Because every deal is different. But the main thing that I always look at, and I don't want to get too complicated, but it's called IRR, which is an internal rate of return. And all it does is it says your money based over this period of time created this much wealth. So it's a little bit different, right? Like if it took you 30 years to double your money, your IRR is very low. So there are some correlations, right? So it's the time use of money. So for me, it's the most important. And many deals do what's called about a 16%. Some do better, some do less. And then if you kind of make that a little simpler terms, the concept of it is doubling your money every 5 to 6 years, is sort of a relative term. And again, the money comes different ways, like I talked about earlier, right? I invested in a new build. Well, no money comes for several years because they're building it. And then once they start building it, they've got to get tenants in it. They've got to get it going. Then a little bit of cash flow starts coming and then what they do is they reach a point where it's kind of at a maximum value for the effort, and they often sell it. And then so again, you can buy it at different times, right? You can invest in the land, you can invest in the build, and then you can invest in the finished product. So in theory, some of the investments I'm in, I plan to do all three, if it's available to me. And then each stage of those has a little bit different risk to it, right? So the land has some higher returns, but also some risks if you can't get your permits, or all of a sudden construction costs go way up. But at the end of the day, risk reward is kind of balanced out. And then people should have a little bit different, so again, I've invested in medical center. Especially now, there's a big need for the medical center, right? Aging population. They kind of decentralized a lot of services after COVID. Trying not to have people in come into hospital things, and so it's a great business to invest in. Storage. We have a lot of junk, and people will pay money to put their junk somewhere. And it's a very stable income class, because people I did it when I moved from Canada to America, put all my stuff in storage for 3 years and then threw it out. Really silly if you think about it, but everybody does it. It's just kind of, and it gives you that nice investment income when you invest in those types of assets.
So what you are really saying, Trevor, is investors should expect to double their money, even if they are not looking for cash flow, whether they invest
Yeah.
in land or a value add opportunity, as long as they can see their IRRs are in teens,
Yeah.
14, 15%, as long as projects are doubling their money anywhere from 4 to 6 years,
Yeah.
potential 5 to 6 years in that time frame, that's a normal kind of return in these asset classes
That's
or
right. And
in
then
real estate.
we talked about starting early, right?
Yeah.
So again, if I started at 25 and doubled my money all those 5-year increments, life would be a lot different right now, right? But I didn't start at 25, and a lot of people don't even think of starting. And there are ways you can get into deals with not as much money. You know, some of the deals do have bigger minimums, but you can get a group of 5 friends together and meet a minimum. There's lots of ways to get into it. Again, you know, don't wait to get into real estate. Buy real estate and wait. I can't say that enough.
Yeah, we need to do a modeling, maybe create an Excel spreadsheet and do the modeling. If somebody is able to save 25,000 and they are making 20% annualized,
Yeah,
and how much would they make, and they keep on saving that much money every year and keep on repeating that, you will see that in 10 years easily somebody who's investing 50,000 in 10 years, by the age of 35 they would definitely have more than $1 million in their portfolio.
yeah. It's
So
amazing. It really,
yeah,
you know, and again, when you look at real estate, everybody needs it. I mean, we
yeah,
all live in a home, we all live in an apartment, we all go to a restaurant, we all go to a hotel, all of these things, life revolves around them. And
yeah,
of course, right now there's a big housing shortage in America. And
yeah,
that's why, apartment rents are going up so much and housing costs are going up so much.
yeah. And to your point, when I say that sometimes, to myself, when I open my eyes, what do I see around me?
Yeah,
I see, besides my family, I just see real estate.
yeah,
I
yeah,
see people, of course, but I mean, where are they living? Where are they going to the offices? It's real estate, and it's not moving.
yeah,
It is there year after year. It's not like somebody has taken away my apartment complex and taken from San Antonio
yeah,
to New York. That doesn't happen, right? It will always be there.
yeah,
Nobody can touch it.
yeah.
So
And then
that's an
one other
asset.
thing too that people are often afraid of, right? This thing called toilets, tenants, and trash, right?
Yeah,
So again, a lot of people do invest in single family homes and they self-manage, and that is more active than passive. It's quite a bit different than we're talking about now. It is still a way to build wealth creation, but it's not passive, right? In other words, your energies are being put into it. You have to manage it, you have to buy it, you have to sell it, where what we're talking about is someone else does all of the work. They go find the real estate, they put all the terms together, they get the bank lending, and all of these things, and then you give them some of your money. And again, you have to remember the investors are probably putting in 30% of the money, and the bank's putting in 70% of the money. So the bank is financing your investment. That does not happen in the stock market, right? The bank does not finance your investment. And that is the power of syndication, which is one of the investment vehicles that we know and talk about a lot.
so by doing nothing, these passive investors are potentially able to make more money than by investing in real estate themselves, because that is limited by their own time and energy
Yeah,
and their own skill set. I mean, 10 years ago, if you would ask me any question about real estate, I would say I don't know, because I was so gung ho in my job.
yeah,
I was the best technocrat on the planet. Pardon me for saying that, but I was so adamant what I do is best. But I didn't know anything about real estate.
yeah,
And if you were to tell me go buy a home and fix it yourself, I would not be able to do it. However, what I could have done is I could have invested with somebody else and still made better returns in my
definitely.
mind.
Yeah.
Right. So how much can somebody do actively and how much can somebody do passively? What are your thoughts?
Well, so passively in theory, it is limited to how much money you have, right? Because
Yeah.
you need to have the money to passively invest.
Yeah.
Actively, you're putting your energy. So right now, I'm active. I do this on a full-time basis, and I put all of my energy into it. And there are some rewards for doing that when a deal happens. You make acquisition fees and other things, so you can do well. you also make a percentage of the profit, which is your split for doing all the work. So active is definitely something that accelerates your cash flow, but it's not for everybody. It definitely is not for everybody. A lot of people think, oh, that looks easy. It's not really. Passive investing, like I said, you said, I'm an 18, passive investor on 18 deals. And other than researching the syndicators, going to quarterly meetings and watching my checks come into my bank account, there's nothing else to do. On my active deals, we worked hard on our deal and it's put a lot of hours into it. And again, we had risks, but our passive investors had no risks. We protected them. That was our job, right? As the syndicators, is to protect their money, think of them first. And again, that's why you want to make sure you get somebody that you know, like, and trust, because they're supposed to protect your money first.
Awesome, Trevor. I mean, your thoughts are very simplistic, very communicative. You were able to communicate a lot of good things about how passive investing can help these high tech minds,
Yeah.
to generate some income on the side to begin with, and eventually over a period of time create generational wealth.
Yeah.
Um, uh, Very nicely put. Again, Trevor, thank you so much. How
Uh,
can how can how can these people? I mean, if they want to learn more about you, want to talk to you, how can they reach out to you?
Yeah, so I'm very active on social media. So K Trevor Thompson on LinkedIn or Facebook. And you'll see, and I promote a lot of educational material as you do through my sources, because again, educating people is a huge part of our responsibility as people that are going to be active. Also, my company is Niagara Dash Investments, because I'm from Niagara Falls. So Niagara Dash Investments. And then my email is simply ktt@niagara-investments.com. That's the easiest way to reach me. And you'll see very active, and I love doing interviews. I love podcasts. I love teaching people. I've become so passionate about real estate. I surprised myself, because I just had no idea that it was this intriguing. Because if you think about it, right, I'm taking investors' money and letting them reap the rewards to do whatever their dream is, right? So is it retirement? Is it kid in college? Is it taking care of some homeless people from another where? Is it taking care of dogs at the shelter? Whatever it is, I'm giving them the power to do their dream, it's a pretty incredible responsibility, but I find it very exciting.
Very, very nice thoughts, Trevor. Very good ending to this podcast. I mean, you created a lot of value, shared a lot of genuine thoughts. I mean, golden nuggets that you have shared. I'm pretty sure our listeners will listen to them and hopefully get motivated and follow some of those advices. Having said that, once again, thank you so much, Trevor. Thank you so much for listening to our podcast. As usual, you can reach me via my website, www.myrealtygains.com, and via email, prashant@myrealtygains.com. I would love to hear from you and talk to you about specific needs you may have. Please schedule an appointment with me via my website, again, www.myrealtygains.com. Stay tuned for next podcast. This is Prashant Kumar signing off for today.